Okay, guys, happy Friday. Here we are on the last day of July, 31st of July. And of course, we're going to take a look at Bitcoin. Now, before we do here, just a reminder here with crypto really starting to show signs of life and that we're really about to break out here and leave crypto winter behind us. I just can't think of a better time to come tune up your technical analysis skills, right? So if you've ever been on the edge about joining us, well, boy, this would be a particularly good time to do it. So you can just come over here to TradeDevils.com. Link is directly below the video. Click plans and pricing. That will bring you right to where I am. Of course, we always have the option. You can join us for free and get a feel for the community, see how you like it before you step into either social. The only reason you would go into social as opposed to educational, well, aside from the obvious money difference, you weren't quite ready for the belt system. If you're coming in here, see, here's the progression we hope that you would take. You start in the free version here. Get used to the community, get a feel for it, get a sense of it. But you're starting with the white belt, right? And the white belt will challenge you, right? It's designed to be challenging. But when you get through that, we hope that you've now got a foundation, and then you would move into the higher belts. Blue and purple are going to really challenge you. So that's the progression that we hope you make. But we're giving this away to you, that white belt. I mean, I could bundle that up and sell it if I wanted to, but I don't. I want to give you that knowledge and let you start there. And let me just reemphasize here, this is not entirely an Elliott Wave course, right? White belt's not entirely. In fact, I might say half of it is not Elliott related. Now, of course we get into more Elliott content when we get into the blue and purple, but neither of those are 100% Elliott based either. This is trading education. Elliott Wave is just one of the tools that we use to help us identify where the opportunities are and to reduce the risk. So you will see a lot of new things coming from us. We did a really extensive polling of the membership last month, and as we're rolling into August here, and perhaps quite timely with crypto really starting to rock, you're going to see some new content, some new course material, a lot of feedback that we got from members here that we want to roll out going into the summer and the fall. So that would be a particularly good time to come on over here and take a look at what we're doing. So there you go. There's my little 2-minute promo for you. But just a reminder, no obligation here. This is a great way to start. Get a feel for that white belt. And then if you decide you want to keep going, well, you've got educational. If you think you got enough here, well, you come over and do social. Okay, guys, let's go take a look at Bitcoin. All right, so Friday it is, and Bitcoin is here. Well, now before we get started, I kind of left. We'll kind of drag this off to the side here because I just want you to focus on what we're seeing here. It looks like it would be out of the Trade Devils handbook here. If ever you needed confirmation of how this algorithm works, do I need to? Does this need even any commentary? I mean, the one thing that's unusual is doing it in reverse order. Usually, the algorithm is playing here. It'll come down. It'll be the 50 that will cause the first reaction. Then it'll go to the 65. Here we're doing it in the opposite order here. So the rip from the low, which of course that was just another algo pivot, right? You guys have seen that 100 times, right? So we know that was just a perfect 50 to tick. Then from this algo target, we go all the way. And I have to take this one off so you can see it. Although interesting, that's the 707. That's 65 to the tick, right? Back down here, point of control via visible range. Now we're back to the 50. So interesting that it's doing it in reverse order. So if of course we're not in the clear here until we break this 65. We got to break that pivot. So we got to get up over 14K. Well, you want a comfortable close over 14 to say, okay, game on. As it is now, I think the question is, do we make it on this push? Or do we have enough legs here to get this big? Right? If we're going to apply our Elliott here, do we have enough legs to get up that far in the fifth? I don't know that I'd be counting on that. Looks to me like we're going to have to do this in two parts, right? So again, just simple Elliott here. If we're going to do something along these lines, this is the reload that would get us up there. That's my view. And it's not you have to be an Elliott master to come up with that theory. It's just looking at how far could we go. Well, if this, I think we can pretty much be in agreement that the triangle is our pivot here for the 4. See if I think I'm pretty solid on that pivot. Now get out of there. Right, if I get right, yeah, I am solid on it. All right, if I get right to that pivot, well, let's pull back out. Well, yeah, shit. I mean, yeah, you could. Well, here, let me. There's two ways to do it. That would be 1 through 3. Let's look at this way. Let's look at length of 1 projected from this 4. Now, interesting, right? So this 618, it keeps, well, of course, Bitcoin is very responsive to the 618, but if we're going to get up to the 100, so if we're just going to use traditional Elliott wave relationship structure here and projection, excuse me, length of the 1 from the proposed 4, well, if we're going to make 100, well, we'd be coming up shy, right? Of course, now if we're going to get up here and get the, pretty big extension in the 5th, yeah, we could do it, but I don't know that I would count on that. It looks to me like more probable we would do it this way, and then so we would get our clear impulse, down we come, look for something technical, some of this, oh, there's all sorts of structure, volume here, could be this one, we don't know, but then this is the one that gets you through, and you might do it this way, right? That is going to be stiff resistance, right? We know the algorithm's going to play defense there. You might have to do it that way. Now you're off. So I just have lately just trying to reinforce this. Never assume something's going to break. Always assume it's going to hold until it does break. Right? Even things like a trend line like this, or the big one that we had that on there forever. Right? This one. Don't assume it's going to break until it breaks. Right? Now we're comfortably, clearly through it, but I would leave it somewhere because it wouldn't be surprising at all to have us come down and test it. Right, so don't forget that that's there. So better to hide it rather than just delete it. Now here I'm going to delete it because I'm just using this for the demonstration here. But on my on the primary account where I'm following this, I just hide it, right? So you can always bring it back and say, whoa, wait a minute, where's that? Why did it stop there? Keep that in mind. Now this 618 is kind of interesting because the larger degree count here is still just a wild card. There is a count that some of us have been kind of looking at as a possible W. We're going up for the X and then we'd come down for the Y. Now that would imply much lower prices. And as I think about what could cause that, if we're going to go down, challenge these lows, is that even possible? Well, about the only thing that I could see here, if this ends up being like, this is great, you're forecasting here without a lot of information. But if this is going to play as an ABC into a WX, and then we've gone A, we're going into the B. Pardon me, we've gone A, B, C into an X. So to label that, right, this would be a very long-term count here. If we go A, B, C into an X there, about the only thing that I could see that would cause that would be a complete collapse of the stock market, which you can't eliminate that possibility. Right, given how just insane things are, and then don't forget here, even though this is awfully big, right? Don't forget you got this here as well. All right, so look where the median line tees up here. So if this is the B and we're going for the C, what are we doing here? Right? Again, now I'm getting way ahead of the game here. Just in terms of what's the longer term count? How would we handle this long term? Right? I mean, so one thought that this was a triangle, and I suppose still could be. If we gone A, B, C, D, we'd come back down for the E, and then go from there. But if you put it all together, you go out to a weekly or a monthly. There's some interesting possibilities here. But right now, just based on what we've got, right? So do I have a corner pocket here? Well, absolutely, I do. Right? But still, right? 80% that we get there. Right, as long as this pivot holds, so we got 38.29. So as we sit here at 11K, it would take quite a collapse to come down and invalidate this. But remember, a failure. Right, so again, don't make any assumptions. A failure to make the median line sets up a move equal to or greater than the move that failed to get there. Right, now, I'm as big a bull as you'll find anywhere, but again, don't make assumptions. Right, just trade what you see. Right now, I've got it would appear I've got an impulse going in. Well, is it a 1? Is it an A? Well, you can't you can't plant a flag on it until you see what follows it, right? Right now, I've got a contender for an impulse, right? In a bit of a challenging one with a very shallow 2 and a bigger 4 and a kind of a funny triangle. But just looking at where this could go. Well, first we got to break the 50, right? Right? The algorithm doesn't say, oh, well, since we defended here, we're not going to defend here anymore, right? That's why you're running into resistance there. Well, now, see, price action guys who don't pay attention to this are going to say, oh, well, what's happening here is we're running into that structure, all right? So this little pivot over here, well, now we wrestled with it. Now we're through. Right, now, and I'm not discounting price action, right? I use it every day. But I'm just saying, if the Elliott count is helpful here, well, do I have enough right now? Do I have enough right now for that to be completed? Hell yeah, I do. Now, we'll look in here and see when we go down to I'm on a daily, we look at a smaller time frame, maybe there's more legs there. But, if you're starting to forecast, well, where could that go? Boy, that, right now, see, you look at it and you go, oh, right, well, they've been there. But you add the median line, and I know, as long as that pivot holds, 80% odds that I get there. 80%. Right? It doesn't have to be here, right? It could be here. We could hit it here as we're tagging the all-time high, right? What would that be? That would be that would be a year from now, right? So don't assume we're going there tomorrow, right? That's what are we, 11 and 5? That's $2,500 move. Well, shit, with Bitcoin, right? I could do that over the weekend. But again, my point being, don't make assumptions about where we're going. This is just, it's always good to kind of have a long-term, well, what if, could be, maybe, keep that for all those scenarios so you've thought it through. So you're not just down here on the 15-minute, you're not paying attention to where you are in the larger context. Where are we? Where is this count going? Well, the daily's giving you some, but you might consider, you'd want to look at it log scale, look at it weekly, look at it monthly, get as much history as you can. Bitstamp, I think there's one exchange that gives us more history than Bitstamp. I can't remember which one it is. One of my guys will know. But so here, coming up to that, right? So, well, what if it hit that? Well, what would you be anticipating next if we get there? Right? Wouldn't that be the first place you'd start looking right there? If we were going to come down, well, of course, you'd want to see it do it in threes. But that's if you're just laying out the path of least resistance, kind of Elliott playbook. If we're going to go and complete this impulse, well, right? Why would you assume anything other than 3 down to a 50? Now, that doesn't mean that that's inevitably what happens. But if you were going to make a projection, right, wouldn't that be the logical place to make that projection? Now, of course, where I'm here daily, they're going to be smaller pitchforks and all sorts of other wave relationships. But just looking at the big picture, it's kind of interesting. It's worthwhile, when you're not going to trade off of this, but it's worthwhile when over the weekend you're sitting around, you're kind of looking at this, going, "What's the big picture? Where could this be going? How are we going to end up counting all of this? 5 years from now?" Just kind of an exercise in just creativity in terms of applying some Elliott here, and what do you see happening there, right? And let that dictate what your longer term view is. So right now, even if this does play as an ABC, certainly the intermediate term would be very bullish. All right, so all of that said, let's get over to the smaller time frame here. So this here's a 3 hour. I don't remember what exchange this is. I think I'm still on Bitstamp. Yeah, so so I'm just working off, because we went through the count last Friday, right? So we got clarity on the count off the low. If you are a recent sub, or I'm pretty sure members have all seen that, right? But you can always just go back to last Friday's here where we resolved how to come out of this triangle. So working off of this low, I think this holds. No reason to change this, so there's not a lot of new information here. It still looks like 1, 2, 3, 4, 5 to get our impulse off the low. We get a leading diagonal in the 1, 2. There's your impulsive 3, 4, 5. Now we get a very shallow 2, right? Very shallow 2. But what comes off of that, I think, is hard to call it anything other than a 3. Now this has gotten a little funky, but interesting here now as we broke. So here's that 50. So I'm going to take this off just to clear up the chart. Oh shit, let's take that off. Okay, so looks like maybe I got to go down now. Let's go to a 15-minute. Well, You know, so you got a couple of possibilities. So this is far enough to where you could think running flat, but based on I don't like the C being that shallow. So you could go 3, 3, you know, 1, 2, 3. You know, it's not a great C, whether it's part of a diagonal or not. I prefer this because the alternate would be that we've got A, B, C truncate. Well, we have a running flat. I don't love the trying to dig 5 out of there. And then the D, E here looks all right. So I would go with this here. This being the 4. Interesting that it would be a couple of really difficult triangles that would come back to back. Although with Bitcoin, maybe not so crazy. It's always so challenging technically. So if we think about that, this all being a big triangle, I think we can all agree. Now I'm going to draw this. It's going to be a little sloppy here, but so this big triangle leads to a breakout and then yet another triangle coming out of that. So so now that we've broken this pivot, I think this is starting to look a little bit better as a triangle. So where would we project that to go? Well, so in terms of a new trade, I think you're late to the party here. This, again, as I've been saying a lot lately, I never, ever, ever, ever buy that, ever. Right? And as I've said many times lately, the reason I don't ever buy that is because I've bought it hundreds of times in the past, well, maybe not hundreds, enough times in the past to where I just don't do it anymore. Right? You can see already, right? The breakout traders are already underwater. No, it's not a lot, right? But it's a wick pump and immediately rejected, right? So what's happening, right? The stops, there were stops there, right? So the stops pump, then they pull it back. Now you're not, right? You haven't gone that far. We go down to a 15-minute. It's not extreme. And if we look here, is there really a 1-2 coming out that? Well, there could be, right? It looks like 1, 2. Looks like. Yeah, you could do it. So it looks like you could get, if this is your 1, 2, well, here's 50. We're to and through here, so that's annoying. Well, let's see. Do we have to do that? Oh, shit. God, do I have to go to a 5-minute? Jeez, I hate doing that. 1, 2, 3, 4, 5. So you see the problem here. I've got an overlap here, so I'd rather hold this as an impulse into the 1. So I think I can get that. So if we go 1, 2, well then this has to be 1, 2, right? So you go 3, 4, 5 up here. So it might be. Let me go up a degree here, right? So you can get it. I'm on a 10-minute, right? So A, B, C into the 2, right? I don't like doing that, but looks like we need to, right? So there 3. Now that's not much there, right? But that's all you got at the moment. So let's bring that down. Right, so maybe you can get away with that. Now this is going to have to go up here and resolve and complete. Oh, what do I want there? That. Let's put it in, here we'll put it in yellow so we can see it, right? So it's not ideal, and let's see how far that goes. And broke the golden zone. So, that's close. Broke it by a couple of ticks. What do we get there? A few ticks on that. I'm getting right on it. That ain't much, right? So if we look here, now that's golden zone, right on it. Yep, there's your 65. So this is a 1, 2. That could work, right? So remember, an algo doesn't care about the Elliott count, so I'm just looking what they use, right? So if it was here, your first thought would be, oh, it broke, bear's ball, but you got to go back 1, and then you're not to the tick. So you got to think there. So I'd like to see that, which would complete the potential third. 4, 5 goes in. Do we have anything? Yeah, tentative, right? So shit, I'm down here on a 10-minute. I don't like this enough to trade it yet because it's too squirrely, right? So this wick is, so maybe that's the rejection here, so that we come down. It could be that's just algo participation, right? So they grab the 65, but until that gets up there, I wouldn't chase this. It's just me, right? I just don't like the look of it. I'd get up here, confirm that for me, then give me that, right? Then I like that. I'd like that. So then I know where I am, right? So I know that I come out of here and the 1, 2, 1, 2 is in play, right? Right now, this you don't have much. I'm down on a 3. Do I have a 3 there? Not really. So this could get. Is there any other? I don't see another count here, right? So this was important to hold here. Because, so look at it, if we start to break down and we break all of this and we start to roll over, well, this count's going to start to fall apart because it's going to be tough to complete the fifth up here, right? If this is the 4, we need more here to really say, okay, the 4 is rock solid, right? If this starts to fall apart, well, here, let's pull it back out to an hourly. Then where are we? Right? If we're holding to the 4 here and we're going up for the 5, then again here's the pump wick. Well, you don't really we don't want this to fall apart, right? So for bulls, this little pivot here is going to be pretty critical. So let's look at that, right? And it looks like it's already about to get challenged. So what's our pivot here? This is let's call it 11,233. We do not want to see that break. To hold to the idea that this 4, well, shit, I got to go back. To the idea that this is a 3, here's the triangle into the 4, and now we're going to go up for the 5. We don't want to see this break, right? And I'm already stretching a little bit to accommodate it because it went so far here. So I had to kind of rework the count to go 1 2 1 2 to avoid the overlap. So if this overlaps, then this really starts to get ugly. I suppose there is an alternate here, right? So this. So if it starts to come down here, right? So then we have to look at that and say, okay, well, so we just got another 3 here. So this would be 3 3 3 3. Yeah, it's gonna get interesting. Right? So if we come down here, well, we might. I don't want to go there yet until we're forced to. Let's hold here, and I note here I'm allowing for the overlap here in this wick because there's no body, and then I get the Y here. So already a little bit of an accommodation here. Now going up into this, this needs to come out of here with a 5 for this count to hold, or this is going to be some sort of a expanded B wave, something funky here. Or we're going to go ABC, X, ABC. It remains to be seen. We don't have clarity here. So I'd be cautious about adding here. Well, one, you're adding. It's never. Oh, come on. Jesus, come on, trading view. What's up here? Okay, so it's never a good idea to buy up here. Never, right? My opinion, right? It's just high risk to buy up here. Right? We've talked about this quite a lot lately. We don't want to buy the breakout. We want to buy the retracement. Give me the internal retracement. Because then I have the legs to go up, and then if I get there, look, I'm going with house money as opposed to starting here. If I start here, so the break, I guarantee you there are breakout traders that are long here. And they're already underwater. So now they're second guessing. They're like, oh shit, what did I do? I'm such a dumbass, right? We've all done it, right? You know that, right? Oh, I know better than to do that. Right? I mean, I've done it so many times. Again, that's why I don't do it. And first to tell you, right, there are trades that blow up and I miss them. Right? I miss them because the risk reward is too high for me. I've been burned so many times doing it that it's just never, I'll let it go. I just never want to do that. So if I get, now I'm not saying that when it's coming down, try and pick the turn. That's not what I'm saying. I'm saying if it comes down here, give me a little sign of strength. So then I can buy it and put the stop right there. Right? So then I've got I got a much better risk reward here. If I put my stop right here after that little sign of, okay, there's some buyers coming in. Well, if I get stopped out there, okay, little baby loss. I used to use the boxing analogy a lot, right? So this is just a jab, right? You're not going to knock me out there. It's just a little jab, right? Okay, I duck, shake, hey, buck my head, boom, counter punch. They're fine, but it's this that's always the biggest mistake. It's compounded by people trading too much size or getting over leveraged. So instead of the little jab, if you will, right? It just brushes off your forehead. You're not going to get knocked out with that. You're not going to knock me out with a jab. But if you do let that get away from you, now you're in serious trouble. And if you're, well, one, you get liquidated if you're leveraged, but your trade plan can blow up because here's what you do. You go, oh shit, well, okay, I'm just gonna use the structure down here. It won't go beyond that, right? We're good there. It won't go beyond that. It won't go beyond, well, shit, I have this, yeah, look at this big high volume node here I have. Well, it's not gonna go, there's point of control. I give that plenty of room. It's not gonna go below that. It won't go below that. Will it? Will it? Right? That's how you blow accounts up. Or you do so much damage that you can't recover from it, or it's going to take you so long to recover from it. What you'll end up doing is refunding your account. You'll have to add money to it. Right? The single biggest mistake every trader makes is too much risk, too much size, moving stops. I only speak like this because I've done it myself so many times. I know exactly. I mean, it takes years to get to where you don't do it. You have to lose so much money doing that ultimately it's just pleasure pain principle kicks in. Nope, I don't buy that because I've had too much pain doing it. Right? This is all pleasure pain, or you can think fear, greed, right? Greed, fear. Little greed, little fear, right. Right? So you got to disconnect from that, or you're just in a constant state of anxiety. It takes all the fun out of trading. If you're just like, oh my God, I need this one to go, it's got to go. I guarantee you that's the one that will just free fall. If you need a trade to go, get the hell out of it, because I promise you, it's a perversion in the market, right? It's some universal law. I can't explain it. I can just, speaking from so much experience, if I need a trade, like, oh, this is the one. This is get well, baby. This is it right here. I know it's going to go. That's what'll happen. And then you're fucked, right? And then you're so far down that now it's just about trying to get back to even. And that's never a good place to be. Never a good. You've lost so much money. It's like, okay, I have members come in. The first thing they'll tell me, two things. Been watching you for years. I wish I'd started sooner, but I kind of blew up my account, or now I'm so far down. I've just got a bunch of altcoins I'm holding. I'm trying to come back. Like I'm a miracle worker. Somehow I can get them back to even. The mistakes were early on, right? You can't undo those kind of mistakes. So now you just have to. It's essentially you're starting over. You're just with a much smaller account, or you've got to reload your account. Where it all comes from. Shit, I'm on a rant here. I didn't mean to. Where it all comes from is the assumption that this is going to be fast money, right? You have to disconnect from that. You have to be thinking incrementally. Like, listen, if I could do $100 a week, just $100 a week. If you compound that and you continue to trade conservatively, well, 4 or 5 years, the amount of money that you'll have, assuming you compound it, will blow your mind. You'll be well over $1 million. But what people do is they say, "Fuck, man, $100? I'm in here busting my hump in here. I'm fucking monitoring all this stuff. I'm constantly on top of this, and I make $100." That's the catch-22 of it. Instead of being happy with the 100, hey, I did $100 this week. Let's see if I can do 100 next week and next week. And maybe I'll go for 150 after I've done this every week for a month or 2 or 3. Then you start going a little bit bigger because the size gets a little bit bigger because now you've proven, now you got working with house money. It's the impatience. Like, fuck, man, $100? I'm not doing this for $100. It's $100 times 1,000 trades or 100 trades. And when you get impatient because, I want that Lambo now, that's when you're over trading and you're not happy with that $100. Fuck, $100? What a waste of time. No, you're missing the entire point. And when someone has that mentality, I can almost guarantee a blow up. Almost guaranteed because of their impatience. So sooner or later, they're going to trade too big, over leveraged, move a stop. They're gonna be in denial. Then it's the trader's prayer, just this one time. Get me out of trouble just this one time, and I'll never do it again. I promise I'll never do it again. It all started right here, right when you didn't take the little loser right there. That's how that whole sequence goes. I've lived it, guys. That's the only reason I can speak from experience and with such authority and conviction, because I've done it so many times. It's impatience, right? Lambos will come. but not all at once. All right, guys, didn't mean to get that much on a rant there, but I'm just trying to reach you on this because it's just one DM I get after another from traders coming in, and it's always the same problem. Okay, guys, there we go. I'm back. We're going to do a couple more here. So back with you shortly. I'll see what looks like ETH is going to be up. Okay, talk to you a little bit.